if they're going to really trim down the government,
Yeah.
the way they're talking, if cutting positions, cutting down spending, that's going to have a ripple effect.
Widespread economic impacts, not just on the market, but employment and or unemployment rates. Because if you fire 350,000 federal government employees nationwide, that has a massive impact on the labor force.
There's going to be ripple effects, and if you are retired, you really don't want to subject yourself to all this up and down volatility.
Correct.
Maybe, do you think it's better for the long term? Yes. But in the short term, you could get cut up and chopped up in a lot of this.
It's going to be a painful process.
Well, you and I have been to the lake. You know when those big boats come through,
Yeah.
and the water might
avoid the wake.
Yeah, the wake is going to be killer for some
Right.
of these folks. And there's strategies out there that people can engage that they don't have to deal with a lot of this volatility, that they can still participate in the lion's share of the market, but then they have some buffers on the downside or some trigger. There's a lot of different strategies, but so many people are just riding all the ups and the downs.
Exactly. One of the issues is, we look all the way back to 2008, the financial crisis, where market goes through a major downturn, but you still have to generate the income off of your portfolio that you need to live on. And, you hear about these things, the 4% rule and all that. Well, what if 4% of half of your account value isn't enough for you to live on? So that's what I'm really discussing with a lot of folks, is putting that game plan in ahead of time. We know the market is going to drop and continue to be volatile. At some point, we just don't know when.